Hey, welcome everybody. I notice there are more than a few familiar faces here. Wow. I see Thomas made it, and Rain, and Marky is here, of course, and Max. Lisa, welcome, Lisa. Frederick is here. Welcome, everybody. Thanks for spending time here. Dick is here, and David, of course. Jorge, hey, Jorge. Chris is here, and CJ. Welcome, Al and Antoine. Thanks for spending time here, folks. There's so many people, too many to note. I'm sorry, I can't. I want to go down and say hi to everybody, but hey there, Dick. So Roberto's here, and I'm really excited because Roberto told me that he's going to share his top secret, his best trading secret. So we're all actually, and welcome to all of you watching the recording as well. Basically, as you probably know, you've seen Roberto post his trades on the forum at Naked Forex now. You've seen the way that he teaches, which is really the one thing that people say about Roberto is that he explains things in a nice, relaxed manner, and they're really attracted to that. So he's a great teacher, and we're gonna have more of these for those of you that are interested in this stuff. So I really hope that you enjoy this. And Roberto, thanks so much for your time, and thanks for spending time here with everyone and showing us your secrets.
Thanks, Walter. Thanks, guys, for attending the webinar. I'm humbled that everyone's interested in what I have to say. And so I'll just go right into it. I wanted to first talk about an experience I had. Years ago, I attended a weekend Forex seminar, and I remember that it was the longest weekend I ever had. The conference room was really small, had low ceilings, there were about 30 attendees, and it looked like it was a storage area turned into a conference room. The room was hot, there was no ventilation, and I was completely bored and falling asleep. I kept thinking, God, there must be a better way to learn how to trade consistently without having to learn so much information all crammed in a weekend. And my brain was completely fried. I mean, we're going after over charts after charts, all for $1,000. So I went home and I thought, Jesus, I turned on my computer. I opened up my charts. I removed all the indicators that I had, and believe me, I had way too many indicators that you couldn't even see the candles. So I started noticing something really interesting, and I don't know if I came up with it or I heard it from somewhere, but I've been trading it for so long that I completely forgot where I got it. But I do remember going and looking at the charts and going back at several pairs, maybe 20 different pairs, and trying to find this setup that was consistent on many pairs, and it was consistent all the time. And I hope you can appreciate this, and if you do, you're going to love me because this is going to make you a lot of money. And let me just bring up the chart. This is called Turnaround Tuesday, and it's a very simple technique. And essentially what it is that if the markets trend well on Monday, it retraces on Tuesday. So if it goes up on Tuesday, it's just going to sell off. So I'm going to go over first, just show you several, well, not several, because it took me a long time to just put these labels. So I hope you can appreciate this because it took me a half an hour just to put these labels with these little lines and arrows. And so let's get started. Here's Monday. This is the pound New Zealand dollar. Sold off on Monday. Okay, went down 182 pips, and it went back up on Tuesday, 132 pips. Here's the 13th. Okay, we had a pin bar or kangaroo tail. This is the hour chart. Okay, we're just looking at the hour chart, not a higher time frame. Sold off, and here's Tuesday. Recovered and went back up about 240 pips. Okay, let's look at more charts. Monday, a little bit more of a consolidation, but it did sell off. And then Tuesday, you have to be, have to be careful because the market Tuesday's turnaround may not happen till the New York session, which it did. And look at this move up. Okay. Monday again. This is October 29th. Sold off. Here's the turnaround on Tuesday. Okay. I'm just trying to capture a small amount of pips. And in this case, on the pound New Zealand dollar, which moved so much, it was over 100 pips in one day. Here's October 22nd and the 29th, the 23rd rather. Sold off on Monday, Tuesday's retracement. Here's October 15th and the 16th. Monday, sold off. Here's the Tuesday's retracement. Here again, I like when I see these huge moves on Monday because I know it's going to retrace on Tuesday. And there it goes. The problem is when market starts to consolidate on Monday, then it becomes a little bit difficult because you want a retracement. You're looking for a retracement on Tuesday. So these moves are great. And this thing retraced about 50%. Here's another move, October 1st, sold off. And then this is the New York session. Here's your kangaroo tail, and it went up. Okay. Let's look at gold. One of my favorite. Here's a trade. It went up on Monday, and then it just sold off a few hours ago. Okay. Here's November 12th. Sold off on Monday. Tuesday it recovered and retraced. November 5th it went up, and on Tuesday, gold usually retraces late in the day. And there it goes. There's the future trade. Okay. Here's Monday, sold off. Here's Tuesday's retracement. October 29th and the 30th. October 22nd, it went up. Tuesday, it sold off. October 12th, the 15th, and then Tuesday, it went up. Here's October 8th, went up, and Tuesday, it sold off. I was having a lot of fun just doing this, just going back in the chart and just finding these setups. Okay, because the more I found these, the more confidence I had that this worked. Today, this is the pound-yen pair. Sold off on Monday, retraced on Tuesday. Pound Australian dollar. Sold off on Monday. Here's the Tuesday's retracement. And the last one here, which is in process, turnaround Tuesday on USD Canadian pair. Sold off, and here's a retracement. Not much of a retracement. The pairs that I'd like to focus on are Euro New Zealand, Pound New Zealand, Pound Australian dollar. Those seem to, and Pound Yen and gold. Those seem to be the ones I focus on that can give you huge amount of pips. Okay. So that's the secret I wanted to share with everyone. And I'll open the floor for any questions you may have.
That's really interesting. So do you look for... I have a question, sorry. I have to get my question in first. So do you is there always sort of a trigger, like a kangaroo tail or something that you're looking for to sort of trigger that?
You definitely want to qualify the trade. You don't want to blindly just take a trade on Tuesday just because I said so, because it's you definitely want to wait for. I use several methods. I look for an alert candle on a scalping. That's an alert candle there after a long run.
Yeah.
I'm looking for previous support and resistance levels. Here's a support from back here.
Yeah.
And there's my trigger to buy. It's easier when you have a kangaroo tail after a long run.
Yeah.
But if you don't have it, then you look for something else. And then I'll get fancy. I'll start drawing I'll start drawing um, extensions, fib extensions, to see if there's a fib extension at an area that I can take a trade.
Yeah.
Things like that. But usually I keep it simple. A previous support helps. But what I'm doing, and I'm waiting for the market to finish on Monday and completely exhaust itself, and then I start looking to buy. And usually between the Asian session and the beginning, well, around the beginning of the Asian session is a great time. But if the market is completely oversold, then definitely I start getting in the trade. Some trades where the market is consolidating, I'd like to wait to either the New York session or at least the Euro session to enter a trade.
Right. Yeah. No, I'm a lot like that. There's lots of questions here, Roberto. Can you repeat the best?
Ask away.
Okay. Can you repeat the best pairs? Asks Robert. Robert
Sure.
R. Yeah.
Let's go over that. Pound New Zealand dollar. Why? Pound New Zealand dollar moves a lot. Okay, this pair moved. It went down about 191 pips. When I see a pair go down that much, which is more than its daily range, then I know Tuesday is going to retrace. So I start looking for candlestick patterns, previous support or resistance levels. And this candle here was the first sign that the market was ready to turn around. And oftentimes, I'll get in too early, and I'm down 20 or 30 pips. I'm not worried. I know the market's going to turn around on Tuesday. I mean, it happened to me here. I mean, I got in too early on this trade, and it turned against me. And but eventually it just recovered and went back north.
Right.
It happens.
So, Albert says, what is the approximate winning percentage of these trades?
I don't want to say that I haven't had a loss on these trades. I can't remember. Let me just put it this way. I can't remember when I had a loss on a trade setup like this.
Right. Yeah, it's fascinating. I know a trader who does a similar thing with options, basically, throughout the week, and he's looking for the exact same pattern that you're trading, which is really fascinating to me. Dominic asks, it appears to me like you're looking at markets that are range-bound consolidated for example, in the pound Kiwi, says Dominic. Is this true?
No, I'm not. Because if you look at the thing is, you're going to have to do this yourself. You're going to have to go back in history and look at setups and look at Monday and look what happens on Tuesday. I'm looking at gold. Okay. It's very consistent. But you also want to be qualifying a trade. There's a sell-off, and a lot of times it's the continuation from Sunday. This wasn't a continuation from Friday or Sunday, but the market found support on Monday. It went up, and on Tuesday, what did it do? It just turned around and went south. Continuation of the week before's, because it was in a downtrend. Now, you can go on the 4-hour chart and the daily chart and look for the overall trend, which I do. But working off the 1-hour chart, just focusing on this strategy is the simplest and the easiest way I can explain it. And I don't want to make it complicated, and I can. But just find market. If it goes up on Monday, start looking for retracement on Tuesday. It may just go down 30, 40 pips, but it does retrace on Tuesday and find support and then go the other way. In this case, it didn't. It was trending. Monday it just retraced up, and then Tuesday it resumed its trend and eventually went all the way down.
Yep. And so what's interesting about your charts is, like, if you look at that Monday right there you've got, which is October 7th, the open and the close are almost the exact same price, but you're talking about obviously the movement of the day, which was down, and it made that low. You know what I mean? Because if I look at the opening candle and the closing candle, that day is like almost like, I guess, like a kangaroo tail, I suppose, with a long tail, right?
Are you okay? You're talking about
Monday.
the 24-hour session on Monday?
Yeah. Like the open and the
Okay.
close ended up about the same
Right.
spot, but it did go lower all day, obviously. I mean, it went.
Right.
Yeah,
Right.
yeah, yeah. So you're
Yes.
looking at the movement.
I
It's not the close of the daily candle; it's the movement of the day, basically.
Right. It's extremely important that you keep this as simple as possible.
Mm.
And just have a simple minded attitude about just looking at Monday and Tuesday. I just call it Tuesday's retracement. Look at Monday, and it's important that on Monday, to put in, a good number of pips. If it's consolidating, I may not take the trade, or I may be looking at some support or resistance to be broken if I want to sell it on Tuesday. But I'm looking for a movement up on Monday and then selling it on Tuesday.
Right.
And the only way you're going to be convinced of this, if you go to charts and look at this huge move, and this was a news event, obviously. And look what it did on Tuesday. It just sold off. Even before Tuesday. Okay. It went down. So all I'm doing is looking at price on an hourly between these vertical lines, this 24-hour session, and visually looking, okay, if the market went up on Monday, it's going to retrace on Tuesday, and I'm going to sell it on Tuesday or maybe even before and get out at a fib level. That's what I do. Okay.
Mm-hmm. Yep.
Does everyone follow me?
Yep. There's lots of questions here. We've got, Albert says, where would you put your stop loss? Albert wants to know.
My stop loss is the high. Yeah, no, you have to, my stop loss is above the high on Monday.
Got it.
Here, let's look at a trade setup where it's selling off. My stop loss is below the low of Monday here. This is an easy trade. We do have a kangaroo tail, but the candle preceding that is larger, so I would wait for price to break above the kangaroo tail before I would even think about taking this trade. But I'm thinking of retracement. I'm always thinking of retracement, and I have to believe in this trade setup because I've seen it so many times. I've traded it so many times, so I cannot be thinking about, well, what if it turns against me? I can't. Okay, yeah. When you trade, you're going into battle, and when you go into battle, you cannot think about what if I get killed, what if I lose the battle. You cannot. You have to be in a zone. You have to be prepared to enter a trade, put your stop loss, take your trade, and take your profit, and then move on. And what I'm showing you is a very simple technique without any indicators, just price action alone. If you want to throw in an indicator, and I do use indicators, throw in stochastics. It's oversold on stochastics on the 1 hour chart. If you need confirmation, use RSI. Whatever methodology, whatever you need, use a moving average line if it's going to help you. I don't need it because I've seen this so many times on so many different pairs. I'm just looking at price action, and I'm waiting for price to exhaust itself, and that's the key thing. You want price to be completely exhausted on Monday so you can buy it either Monday night, Asian session, or Tuesday.
Mm-hmm. Yep, makes sense. Dominic says let's see, it looks like he's talking about the May 22nd, 2000. This is the pound Kiwi that Dominic's looking at. And he says from May 22nd, 2012 to, I think he's saying May 7th? May 22nd to May 7th, 2012, a massive sell-off in the pound Kiwi. Would you find it popping up there? May... So he's basically on the pound Kiwi, yeah. He's basically found a strong trend, and he's asking what would happen in that instance. Would you still expect to see this move here, which is
Oh yeah, we had the pound kiwi.
Yeah,
Sorry.
we had the pound kiwi. It's May.
Back what in May?
Yeah, it looks like it's May 7th to May 22nd, I believe, is what he's talking about. Yeah. I'm messed up because as an American living in Australia, you know how they write the dates differently everywhere else in the world? So anytime I see
Right,
dates,
right,
I get it.
right. Especially,
every time I see dates, it's a
yeah,
little
I
bit.
keep on.
Yeah.
Right, I live in Spain and I keep on mixing up my date of birth. And people think, well,
Yeah.
you weren't born. There's no month. There's not a 17th month. There's only 12 months.
Yeah.
I was born September 17th. They say no. There's no 17th month. There's only pick 12, one of 12 months.
Yeah.
So I keep doing that. Okay, so let's go to May.
Yeah, so the extreme high, he says, is May 22nd. And then
May 22nd. Okay.
yeah, May 22nd to
May 22nd.
to May 7th. Yeah. Yeah.
All right. Oh wait. Okay. So May 22nd.
So
Now is May 22nd a Monday?
let me tell you, I'll tell you. I'm looking it up right now for you. Okay, May 22nd is a Tuesday, so May 21st would have been the Monday. Yeah.
Here we go. Here we go. Okay. Here's Monday. Here's Tuesday.
Yep. Looks like it fits to me. Yep. Yep. So that hopefully that answers your question, Dominic. So,
This is a great move because look at this. It went down 320 pips.
yeah.
And it was completely exhausted. And then Tuesday, it turned around. It went up 400 pips. That's wow. Would have loved to have traded that.
Yeah, that's a great one. David asked, would it be true to say if we see a bearish candle on Monday, then we look to go long on Tuesday? So I think you're talking about a daily candle, David. Yeah, but you're looking at the 1 hour.
We're trading off the hourly. We're
Yeah.
trading off the 1 hour chart. It's really important that you're not looking at a daily chart or even a 4 hour chart, because what we're doing is capturing a small portion, or actually sometimes a whole day, regardless of the trend.
Right.
We're not thinking about trend trading, where we're capturing this movement. This is very dynamic. Market is selling off on Monday, and it's retracing on Tuesday. That's all we're doing.
Right.
Okay.
Bill asked, what are the other pairs mentioned? Bill, it's the pound Kiwi, the pound yen, the pound Aussie, and gold. Is that correct?
Right.
Yeah.
Yes. And the thing is, I've looked at 20 pairs and I found consistency on all of them.
Yeah.
But some pairs, I don't trade the euro dollar because it doesn't. I'm so spoiled trading euro New Zealand and euro and pound New Zealand and pound yen, because I can make more money in a very short period of time. That would probably take me all day or 2 days on the euro dollar.
Yeah.
There's only 20 trading days in the month, and I need to maximize my pips.
Yeah.
And I don't want to stay in a trade that's going to be consolidating for 2 or 3 days and then exit that trade for a 20 pip gain. That's exhausting.
Yeah.
And it's the reason I've been looking for setups like this.
Yeah. Mike says, nice research, Roberto. Are you taking the trades strictly off the 1 hour chart? Yep, he sure is, Mike.
Yes.
Yep.
Yes. I mean, I'll look at a 4 hour chart and see what's going on, but my trades and I take trades off the 1 hour.
Yep. Dominic says, what is your reason for entry? Is it the support resistance or a bar pattern, etc.? I think
Monday is a sell-off, Tuesday is retracement. That's the reason.
Yeah.
It's just the dynamics of Monday and Tuesday.
I mean, obviously,
that's the only reason.
You can see here on the 21st, you have. Is everyone familiar here with the alert candle? I mean, Roberto's talked about that in the past. You probably, some of you may be new, but basically, if you could, is there any way you could use this example here, the 21st and 22nd, Roberto, to talk about a possible?
Here's the trade setup.
Let's
go over this, because as I'm looking at this trade, I'm seeing a strong support. First, I'm going to count the number of reasons to sell this trade, other than the Monday and Tuesday retracement. Number one, of course, I'm buying on Tuesday. Number two, previous support. Okay. Number three, I have an alert candle. After 6, 7, how many hourly candles, we have an alert candle. And then, yeah, it prints a lower low, but it never breaks the low of May 17th. So it prints a nice green bullish candle. Basically, that's my trigger to buy.
Yeah, that looks like the nicest, cleanest sort of trigger to me.
Right.
Yeah.
So I that's what I look for. Because why? It's at that previous support level. Now, what I'm going to do is see the swing low here. And let me just put an arrow there. There's a swing low. And here's the swing high. So what I'm going to do, so I will also draw a fib top to bottom, or the most recent, I'm sorry. It's got to be from the most recent low, most recent high. And price came back down to a 261 extension. Let me draw it again. So I'm looking for these levels here, but I have to go from, a lot of people go from right to left. It doesn't matter to me as long as this is the most recent swing low, this is the most recent swing high. So I draw a fib from the low to the high, and price came down to an extension. Okay, and I'll often do that. I don't need it. What's important here is that price came down to a previous support, and there was a clean bullish candle, and it is Tuesday, so I'm going to buy.
Yep.
Okay.
Yeah, that's a great example. I'm glad Dom brought it up.
Yeah, Dom, so did I. Thanks a lot, Dom. That was terrific.
Yeah.
I mean, I can go over some other charts. We can qualify these trade setups if you'd like.
Yeah, let's see what they say. Let's see. Dom says it's going to cost you. Please, Andre says, please define the alert candle. Yeah, there are going to be some new people here that don't know about the alert candle. So maybe. Okay.
Alert candle. Alert candle is a trigger that is telling us that the market is ready to turn around and go the other way. So the markets sell off, and basically what I'm looking for is 2 or more candles and the same color. And when the color changes, when we have a color candle change, that is my alert. It's telling me that the market is tired. We have a green candle right here, and it's telling me that this run is basically over, and it's time to start looking for buy signals. So what I do is, let me just make this a little bit. Can everyone see this candle? Is it too small?
I can see it fine. Let's see what other people say. All good, says David. Yep.
Okay.
John says it's fine. Yep.
Right. This is just one of the many mythologies, trading strategies I use for reversals. And I do this on the 1 hour chart. So when I wait, I have more than 2 red candles, because you just need two colors of the same to qualify. And what I do is wait for the color change candle, and then I draw a horizontal line at the close of that candle and place a trade 8 pips above that candle. I put a stop loss about 10 or 20 pips below the alert candle, which would have taken me, down here somewhere. I would have never been taken out, and this is the result of that trade that was taken right here.
And there's another one immediately after. The big green candle is another.
Right, yes. Yeah. And then we have 2 red candles, and then this candle is an alert candle, a color change candle. So you can draw a horizontal line at the close of that candle and enter a trade 8 pips above the close of this candle, but your stop loss needs to be below that alert candle, which is down, would be down here, 20 pips below that. You need some breathing room on the pound New Zealand dollar because it moves so much and it's so volatile.
Yeah. Yeah. Yeah, that's great. So there you go, Andre. That's the alert. That's the alert candle that Roberto was referring to. There's lots of questions here. Do you use 4-hour charts for support and resistance levels? Asks Bill.
Sure.
Yeah.
Great question. Very good question. You want to find as many confluences. I shouldn't have done that because it just threw me off. But doesn't matter. Let's go somewhere else. This is May, so it was what, May 22nd?
Yeah. Yeah.
What was that? It was May 22nd, right?
Well, that was
There it is, right
Tuesday.
there.
That was Tuesday. Yeah. Yeah.
That was Tuesday. Okay, and look at the 4-hour chart. Look at the previous support back in May 17th, which is a tweezer bottom, and you have these two kangaroo tails at a previous resistance turn support from here. So let me just highlight those. Here's the previous resistance turn support, right? And this is where we're going to place a trade. And this is a beautiful kangaroo tail. The previous candle is smaller. And look at this run. So yes, I would look at the 4-hour chart, but my entries is on the 1 hour. Okay, so I would have gotten in this trade before this candle even printed because I'm doing the Monday, Tuesday turnaround. Now, I probably would have exited that trade because I'm only interested in staying in through Tuesday and exiting and then waiting for the next day to see what the market does. Okay, but if you would have traded off the 4-hour chart, obviously you would have not gotten out of this trade after Tuesday. You would have stayed in. Okay.
Okay. David asks, does Monday always sell off? I don't think it's just a down Monday and an up Tuesday. I think it's just the reverse of whatever happens on Monday.
Right, so let's look at an example like that. Monday sold off, right? Tuesday went up. But here, this is gold. Monday went up, and then Tuesday sold off. So it's just a combination. Whatever direction Monday is, then the opposite direction will be on Tuesday.
Yeah.
And it's great looking at a 4-hour chart for more confirmation. I don't like to take a trade unless I see 4 or 5 things going on. And I'll give you a good example of that, of the trade that I took yesterday. This was not a Monday to Tuesday setup. And you see this pin bar here?
Yep.
Right there. The previous candle was smaller. It happened to be a previous resistance. It also happened to be an overlapping fib from the swing highs up here. So I had about 4 or 5 reasons to sell it here, and the market just sold off quite a bit. It went all the way down here. We're not talking about the Monday, Tuesday. We're just talking about prior support and resistance levels, finding a kangaroo tail, and then throwing up a fib level for more confirmation. Here's a fib from the swing high to the swing low over here, and price stopped right at 50%. If I draw another fib, I hope I'm not losing everyone here. If I draw another fib from the swing high here all the way down to the swing low, it was an overlapping fib. We had a 61% and a 50% retracement level with a kangaroo tail at a previous resistance. So these kinds of setups are what I look for, and they are great. There's so many setups like this. And here, when it turned around on Tuesday, it was a pivot point, or rather, not only a pivot point down here, it was also a retracement from the swing low to the swing high. It was at 61% retracement level. Okay, this becomes a lot of fun when you use fibs and pivot points, because market has memory, and these are the levels institutional traders. There's probably standing orders here, and this is what makes the market turn around. Now it's finding resistance. Let's go to the 1-hour chart. So this is the end of the day. So the market is exhausted, and it starts to retrace. And this is another trade that I would take. I actually have an order to. I actually sold it up here because it is at a 61% retracement level from the swing high to the swing low. So I sold it, I bought it, and now I'm selling it again. The market moves in waves, doesn't move in a straight line, and you want to be looking at price action at those specific areas, at those sweet spots, those support resistance levels. You have to be looking at least 5 days of activity on the 1 hour chart so you can spot all those resistance levels and all those support, because price always reacts to those levels.
Right.
I hope I didn't lose everyone. I know we were talking about Monday and Tuesday retracement, and I went off on a different direction there.
No, this is fine. So I have a question. So let's talk about the reasons why you just took that trade today. Because I mean, just
Which
a few.
trade?
The sell on the pound Aussie. You sold the pound Aussie, right?
Pound New Zealand. Pound. I sold it here. Yes.
Yeah, you just sold it
Okay.
today. So let's talk about
I
the
just
reasons
sold it.
why.
I bought it.
Yeah,
Okay, I bought it down here, and then I just sold it here back. You see, the market is tired. It's what is it doing? It's hitting these. This is congested area, and it's hitting these resistance levels here. Now, I'm not thinking of staying in for very long. This is more of a scalp trade. Maybe I'll capture 20 pips or 30 or 40 pips at the most. But there's two things that I do. If you look at these pivot points, I have weekly and daily pivot points. And there's the main pivot point, and then you have R1, R2, R3, and S1, S2, S3. I think of the main pivot point as home. And then you leave home, you go on vacation, but then you start missing home when you get up to R2, R3. And what do you want to do? You want to go back home. So the market comes back down to the main pivot point, and that's the support. If it breaks the main pivot point, it starts going south. We're in a downtrend, but what happens as soon as it starts getting oversold, it starts missing home and starts turning around and tries to get back. That's how I look at pivot points. Okay, yep. So you want to be selling at these extreme levels, and you want to be buying at these extreme levels. Now, again, we're talking about scalping. The market is moving in waves, and when you're trading off the 1 hour chart, you could take advantage of these moves. On a daily chart, this is just one candle, and there's no trade. But look how many trades there are in a 1 hour chart. Okay.
Yep.
There is a video that I go over this. Not that I trade off the daily chart, but while I'm waiting for a good setup on the daily, I'm scalping the market off the 1 hour. So I don't want anyone to misunderstand. It's not that I'm against the daily. I love trading off the daily, and Walter has really helped me trade off the daily chart. But when the market's consolidating, there are no trades on the daily chart. You have to wait for a breakout.
Yeah.
But there's so many trades on the 1 hour chart within that 2 or 3 or 4 day period when the market is range bound.
Yeah. Bill is asking about placing, we have lots of questions here, Roberto. Bill's asking about, do you place your trades at the end of the U.S. or the Tokyo market? I think it's more if you've got reasons to take a trade, right? I mean, there's lots of things that have to line up.
No, it's a great question, and it's both. I'm looking for candlestick patterns. I'm looking for exhaustion. I'm looking for a price to hit a previous support resistance level. I'm looking for a fib extension. So I may draw a fib extension from the swing high to the swing low, and it's not. Let me see what it's printing. It's around 261 extension, but it's broken that. It may go up to these levels, up to the swing high. If it does, my stop loss is above here, and I may enter another sell up here, and then my stop loss is 20 pips above the swing high. Okay, it's a terrific question. It's just that every trade is different, and it just depends on the time of day what candles, how many pips has this put in. It's basically right now has done its projected range from the previous day, because yet Monday it put in 89 pips, and it's basically done that today. Okay, it's put in 90 pips today, so it's done its projected range. So that's another reason why I'm looking to sell at these levels.
So when you
Okay.
look at the daily range, you don't look at like an ATR or anything like that. You're just looking saying, what did it do yesterday?
Right. Let's look at this move here. This went from the low to the high was 115 pips. Low to the high was 127 pips. Basically the same amount of pips. That's what I'm looking for. I don't look at ATRs. I look, what did it do the day before? And that's what I'm targeting. So when the market sold off here, and I know it's turnaround Tuesday, I'm thinking, wow, if I can capture that whole move, that would be great. Okay, I was only able to capture like 72 pips. I had a trailing stop and it took me out. But that was the trade.
Yep. Yep. That's great. So, more questions. Do we... David says, "Do we convert this to Aussie time, which is our Wednesday?" Yeah. So exactly, David. So if you're,
yeah, sorry, that's right. You have to change exactly.
If you're,
I forget.
yeah. So if you're in Australia, you're talking about Tuesday. Is Monday, of course. Well, Roberto's in the U.S. now, or yeah, Roberto's in the U.S. now. So that would be Tuesday, Aussie time, and then Wednesday is your reversal day. Exactly.
Right.
Yeah.
Sorry.
Yeah.
As at least I don't have to translate to a different language.
Yeah.
But yes, yeah, my Monday is your Tuesday, exactly.
Yeah, yeah. Okay, so the other one is Mike says, how did you find this? I bet you were doing cartwheels once you found this pattern.
I was doing more than cartwheels, believe me. Um, I was thinking of all different ways of raising funds, because at the time that I was seeing this, I really didn't have a lot of money to trade. I had quit my job, and I was trading my own account, and it was a very small account, but it was enough that I could live off of. And prior to finding this, I was spending too much money on courses, and I was thinking, I'm not really learning anything. Okay, and I'm forgetting everything I'm learning, and a lot of it had to do with that the courses back then, the knowledge was so fragmented. No one could put things together in a way that someone that's introduced to Forex can understand, and that was my goal. I wanted to do something like that, make it so simple that anyone can learn a system and start trading as a professional immediately, not having to wait 2 or 3 months and having to learn all these different mythologies and different techniques, and then reading all these different books. You need to start making money immediately while you're learning how to trade. That was the goal of this whole thing, and this is why I had that idea, and by the grace of God or whatever, it happened. I just started going back into the charts, on every chart. It was painstaking. I mean, going hours doing this, and I needed to remove the doubt, so I had to look at several pairs and make sure this worked.
Yep. These are 5 p.m. New York time closed charts, yes?
Yes.
Yes, that's what. Okay, so there you go, Jorge. Jorge was asking about that. Yeah, so everyone sees how it works. You're basically looking for a reversal of the first full day. So you don't you don't count those little Sunday candles. I guess that would be the beginning of your Monday chart anyway. Yeah. Yeah. Yeah.
Right.
Yeah.
I actually, with my subscribers, I had a sell signal here, but it gapped down, so we weren't able to get filled in till 30 pips later, which was okay, because this trade, this here is a complete reversal. And if you look this on the 4-hour chart, then it basically looked the same on the 4-hour chart. And it was a previous resistance back from November 9th. Okay, so I like looking at the 1 hour and 4 hour chart. And if I see confluence on those two time frames, then it's very easy for me to take a trade. Like we were looking at May 22nd on the pound New Zealand dollar, there was a kangaroo tail. It was a previous resistance from a week ago. It was clear, a lot clearer on the 4 hour than it was on the 1 hour.
Yep. Bill says this is a good goal. This is primarily useful for Monday, Tuesday, and possibly whenever there is an extension evident in the market.
Right.
Yep. Great.
For me, I just wanted to find one simple technique that if I just traded 1 day a week, I can make some decent amount of money. That's what I was looking for. I needed to find something that worked consistently over time. And this works. This is a very good system. Now, candlestick patterns are extremely important. You need to understand your candlesticks. And I would not be able to do this if I didn't know how to trade candlesticks.
Yeah.
Because I wouldn't know where my entry would be. I wouldn't know, okay, I know I want to buy on Tuesday, but where do I get in? Do I wait till for a breakout? Do I just get in now? So I qualify the trade. I start looking for entries based on prior support resistance. Look at this swing low down here. You see it this all the way here, November 13th? See that?
I do. Yep.
And then look, it bounced off of here. And then what happened? It consolidated that area around 152.80. Price started to consolidate around that level. So this is what I'm looking for. You have to have a bird's eye view. You have to be looking back and try to find places. Look at this tip here. Look at this move there. And price through an alert candle at those areas. And it was a previous, this all is support. All of this is support. These levels were broken. So whenever a support is broken, it becomes what? Anybody?
Whenever a support's broken.
Not a trick question.
Yeah.
When a support is broken, it comes back and it becomes, starts with an R.
Resistance, says Joe. Mellis says resistance. Jeremy, David, Max, everybody's saying resistance. Yep.
When a resistance
Lisa.
is broken, it becomes, starts with an S.
Support. Yep. They're all
right. Very good.
Yeah.
Okay.
Yeah.
Okay. Great. So these are the key levels. These are the levels you want to be looking for a trade. Like here, this is a previous resistance, and we had a kangaroo tail, and the previous candle was smaller, and that's important. If you're looking at a kangaroo tail, it's really important that the previous candle is smaller. If there was a large, solid body, then a kangaroo tail, then no, I wouldn't qualify. But this was a great trade setup. Okay.
Yeah. Anything else before we? Yeah. So just so everybody knows here, I know a lot of you have been waiting for it, but Roberto and I are going to do a webinar series, and so you're all invited to that. I'm going to send you, when we get this recording up, I'll put up the recording. I'll send you a link to the page where you, if you want, you can sign up. Everybody here will get a discount, an early bird discount, if you do want to do the webinar. It's going to be, I think, 6 webinars, and then so we'll each do 3 webinars, and then we'll do live trading room, and you'll get to go to the live trading room for a month as a part of the webinar series. And then if you want to continue on, there will be a small fee for the trading room if you want to keep going on the trading room. I'm going to be talking about a system that I really only talk about at live seminars, so that'll be kind of fun. It's a 1-hour trading system. It's one for big reward, low risk, that sort of thing. It's called the home run trade. Roberto's going to show you all of his tricks of the trade. I know a lot of you are familiar with his videos from the Naked Forex Now forum. So that's really, and you are also, I should let you know, everybody here is also registered for another webinar next week with Roberto, where it's a news trading webinar. So he's going to talk all about that because he's got strategies all based on that. And we actually have a news event, so there may be a trade then. I mean, we can't promise anything, but we're hoping that there may be a news trade next week as well. Robert, the best pairs are on his chart here: the pound Kiwi, the pound Aussie, the pound yen, and the gold in U.S. dollar. Right? Yeah.
Well, there are other pairs, and what I'll do is that I'll put a list together, and I'll just post it on Naked Forex forum. It's a lot easier that way.
Okay, cool.
These are the ones that I like to trade. They're my favorite, but there are others.
Yeah. Okay, cool. So so there you go, folks. Good, simple technique, says Bill. Thank you, says Linda. Thank you for your presentation, says Robert. Yeah, thanks, guys, for spending your time here. So Roberto's going to post more on the forum. I'm going to send you out a link to this webinar, this recording, if you came in late. And you'll also get a link to the webinar series that we're doing in the trading room. You will also be invited next week automatically to the news webinar next week as well. So everybody here will be invited to that. Marky says thanks. Mike says thanks. Cheers, says Jared. Awesome.
Thanks, guys. Thanks, Walter. This has been fun.
Thanks.
Look forward to next week.
Yeah, thanks a lot, Roberto. Thanks so much for your time, and thanks for sharing this with everybody. Everybody is saying thanks.
No problem. My pleasure.
Everyone's really excited. And okay, see ya.
Okay, take care.
Bye.